Good morning and welcome to the PrimeCap Daily. My name is Jamie Leszczynski. It's Friday the 28th of September. We will keep this concise, but there is a fair bit to cover. It is the end of the week, it is the end of the month, and it is the end of the quarter, which means we could see a bit of volatility across the currency markets because fund managers may look to offload certain positions they hold that are underperforming. That doesn't necessarily mean that a currency is going to go one way or t'other, but it is likely that there will be increased activity. Added to which, at 9:30 this morning in the United Kingdom, we have a GDP analysis released. If the economy is shown, or if the gross domestic product of our economy is shown to have grown, then sterling's position at about the 112.50 mark could improve a touch. On the flip side, if the pound if the GDP figure underperforms, doesn't meet expectations, then sterling is somewhat vulnerable. Now, we already saw yesterday that the euro weakened against both sterling and the US dollar on the back of lukewarm sentiment coming through from the single market, from the eurozone. That was kind of in line with our prediction, in fact, but that could all be lost. That fractional gain of the pound could all be lost if we underperform and if the markets are unresponsive to the way we're going domestically. There is a lot more to talk about over the course of the week, so do feel free to give our dealers a call. We have our data calendar on the PrimeCap Data Centre, and one of the key things that we'll be looking to talk to clients about today is this potential for the rate of exchange to be somewhat lower this afternoon, or higher indeed than it is now. So if you are a business and you are importing something valued in euros or something valued or made overseas in US dollars, it's quite literally the case that it could cost you more at 4 o'clock this afternoon than it does right now. So when we talk to our corporate clients, we're discussing with them the potential cost implications were the pound to drop by a certain margin, or indeed the potential cost savings were one to wait and then buy in and buy your product after a perceived rally if the GDP figures are positive. We have to give both sides of the argument, so we're not going to be advising one way or t'other. We're not going to be saying sell now because there's anything that overtly indicates the rate will get better or worse. But we're making you aware and asking you about your risk appetite. That's part of our role. We'll look forward to seeing you on Monday when there'll be a lot more data and dissection. Please feel free to follow us on @PrimeCapBrokers. This is on Twitter. Do put your comments below. Have we been helpful? Does the insight that we're providing give you any confidence, or does it just prompt you to ask more questions? If so, please do share, and we look forward to seeing you next week.